Good morning, everybody. Welcome to the Flow Show, Wednesday, 9th of August, well into summer. Hope you guys are doing all right. Good morning to the two boys.
Good morning.
Thank you. Good morning.
Right. Morning, mate. Morning. Well, what a couple of days we've had in markets. Proper turnaround Tuesday yesterday. Lots going on as always, so we'll get stuck straight into it. Going to kick off with the data, and China went into I wouldn't say deflation, but they went into negative CPI, down 0.3%. Not as much as a down 0.4 expected, but nevertheless, it's a move into negative territory. On the month, CPI was up 0.2%, was expected to fall. PPI worse than expected, but not as bad as the month before. Either way you look at it, it's negative numbers. Now, the National Bureau of Statistics was quick to come out and say that the year-on-year decline in CPI was temporary. That won't change some views in the market that they will need to ease further. Again, talking about the US CPI and its rise and whether that's sustained, we need to see whether this is just a blip or if it is a little deflationary episode, shall we call it that. So next month's data is going to be equally important, as will the one after that. Now, they must have been ready for it this time around. We saw the one weakening yesterday after the data that we got. We got that run up to 725s. As I say, they must have been ready for this number because they were out selling dollars, or their state banks were out selling dollars against the one not long after the data dropped. So they didn't want another episode of what they got yesterday, which was a big rally. So they came out to smooth that in. I suppose not wholly unexpected they might do that, Kay.
No, but that's it. Looks like yeah, smoothing the moves. They did manage though to put it back into the broken support zone. So your 720 is now acting on the opposite side, I guess. If they succeed to put it lower, perhaps some speculators may find it a bit too much to hold it in the short term, but for as long as we're holding above 720, I reckon, yeah, it's just a smoothing process, you know.
Yeah, definitely pressure back on the weakening side if they're going to be easing. I suppose it's just a question of whether they're just going to slow it down or whether they're going to put the brakes on it again. I think still up here, just looking at it from a wider perspective,
728.
It doesn't. Yeah, I mean, to me, I get the impression they don't want it going much higher than the prior high of 728s. You know, they may let it go up to maybe that 730s again, but it just feels they don't want to let it go.
It used to be a very big level up there as well, close to that 740, 735, 740. And I trust they don't want to the market to take it up there straight away, because they know once speculators get their teeth in something, we could be there tomorrow, you know, if the US CPI is high enough to warrant some dollar buying, people will be looking at the dollar CNH, right?
Yeah, exactly. You're still long a bit of this one, aren't you?
Yeah. I've been trading it around, you know, since that break of that trend line around 720 and 721s. Bought it, then sold a bit against that 725, and then bought it back this morning, and that's it. I'm trading it from the long side for as long as that 719, 720 is holding, and if not, then it would have been a small exercise, you know. My average is relatively okay, so I'm not going to lose much if I get done on that one. But in the meantime, as we've already discussed several times, they are in an easing environment, and we've seen the economic data are not good right now, or at least very underwhelming. So that should, in theory, keep the CNH in check. Now, whether it's versus a dollar or versus something else, maybe become clearer tomorrow.
Yeah, definitely, mate. Right, well, moving on, Italy, they've gone into reverse on their windfall tax this morning after their banks got hosed over those moves there. They ran around putting together a sub-plan, if we called it that. The finance ministry said that the tax on net interest income would be capped at 0.1% of assets. Now, market economists have done the sums on that, and they reckon that measure will halve what the impact would have been had they stuck with their original plan. So now they'll raise something like 1.8 billion or something, rather than some 4.5 billion that it might have taken. So Maloney's had a little bit of a Liz Truss moment with that one, and has been forced into a backtrack and to scale things down. So markets getting the upper hand on that policy pulled out of the hat by the Italians.
Truss is maybe on holiday in Italy.
It's what, sorry?
It's holiday season. Perhaps Truss is over there.
Yeah, give him some tips in the back end. But anyway, yeah, so not looking so good for Maloney over there. Bank shares have staged a little bit of a rebound this morning, improved the mood. Now, just not a big headline or anything like that, but there was Germany sold some 5-year bubbles yesterday. What was notable was that the average yield was down to 2.5% from 2.71% previously, and the bid to cover ratio was 2.3 versus 1.9 prior. Now, maybe drawing a thin line between the two, but obviously we had that headline about Germany Bundesbank not paying interest on state reserves, forcing a lot of people into bonds. So I'm wondering if that's the reason why we've seen such a big interest in this 5-year bubble. Plus, also, there's a bit of weight there behind, the market's expectations for a topping of rates by the ECB, again causing a bit of a rush into bonds to lock in some of those higher yields. Hence why the yield has come down to 2.5 from 2.7%. So just these little signs that you can see in things like bond auctions just give you an idea of market, or can give you an idea of market sentiment for rates. I don't know if you guys saw that headline or saw that auction details coming up. If you've got any comments on it?
No, from me, no. I didn't actually see that.
No worries. I'll take that as no then, and we shall move swiftly on. Over in the US, the NFIB Small Business Index came in at the highest this year at 91.9. If I can find it, where was it? 11 o'clock. Came in during yesterday's flow show, actually. Business optimism, 91.9 versus 90.6. So another round of soft landing type data dropping from the US, and again small businesses, which is a key component of activity. The US trade balance also came in. The deficit improved to 65.5 billion from 68.3 billion, as you can see in there. As always, as we're doing now, looking at the import-export performance. Imports weren't off as bad as last time, only down 1% versus minus 2.3% last month. Exports only down 0.1% versus minus 0.5% previously. So not the horrific numbers as we've seen in some of the other trade data, namely Germany and China. So things holding up relatively well. What isn't holding up relatively well was the inventory numbers. Again, something we've been pointing out on the show to keep an eye on now. Inventory is quite a steep drop, minus 0.5% from minus 0.3 expected. These numbers aren't often very volatile. So when you get some big numbers like that, it can suggest a big impact going on the ground. Sales as well. It's okay drawing down inventories if you've got sales to back it up. In this case, we haven't. Sales were down 0.7% versus a 0.3 rise expected. So again, this is another number that gives you a bit of an impression on activity. We're seeing inventories falling and we're seeing sales falling. Now, obviously, this is only month by month numbers, so they can, change month to month, but we'll keep an eye on a trend. If we keep seeing negative numbers from here, it suggests that there's problems to do with activity. So it all builds up the bigger picture of the fundamentals and what's going on and what we need to keep an eye on. Sometimes it just takes small bricks to be put together to build a big wall. And if that wall tips over, that's when you get the big numbers coming lower. So we know there's potential problems with the consumer, with borrowing, tighter financial conditions. We're now seeing some problems in inventories and things like that. We know that manufacturing's in a slump via the PMIs. We know that services have been softening. So again, all these little bricks come together, and then all of a sudden, these small bricks form a big wall. Fed's Harker said we should be at the point of holding rates steady, and we will need to be there for a while. Does not foresee any likely circumstances for an immediate easing of the policy rate. The US economy is on a flight path to a soft landing. We don't want to overdo it with tightening. And probably next year, we will start cutting rates. Fed's Barkin says GDP remains solid and that the labour market remains remarkably resilient. However, inflation remains too high. But it's not our forecast that inflation might spike back up. For firms, the workforce is still the #1 issue, as they're still structurally short skilled workers. One other piece of news was that there's apparently some big strikes in LA yesterday, on top of all the actors and film staff on strike. There's a lot of municipal workers went on strike as well, some 11,000 or something, striking over pay and conditions. So a bit like the UK, there is those sort of issues happening elsewhere. We know it's happening in France. Things are picking up a bit in the US as well. If that grows, again, we're looking at some potential high wage deals to be struck and more inflation in the pipe. In Germany, Chancellor Scholz was giving himself a big pat on the back after Taiwan's TSMC said that it agreed to invest in Germany, and he said that Germany is now likely to become the major location for semiconductor production in Europe. Let's see if they start backdooring some of those semiconductors into Russia and China, like they're doing already. But it could be a decent boost for the German economy if it does kick off there. And another headline, ECB, apparently their press conferences sway markets more than the Fed's, according to a survey or some data that they knocked together, basically saying that they have a better way of signalling to markets and driving markets in the direction they would like via their press conferences than the Fed does. That was an article in the FT if you want to go and check that out. Are they right, lads?
Well, I mean, to me, it's quite something that they spend resources to create such an indicator, to monitor that, and to publish it and comment about it. I mean, they must be very cash rich at the ECB to spend money like that on stupid stuff like that.
Isn't that the EU in a nutshell? Spunking money on stupid stuff. I mean, we all remember the Bendy Bananas saga, don't we?
And the Greek bailout.
Yeah. No one remembers that. Come on.
Well, you do. You're still getting it, aren't you?
Yeah.
Every so often, the rumble of cash trucks driving through Athens on the way to the central bank. What do you think, Stel? Do they have a better record, do you think? Do they move markets better than the Fed?
Sorry, what's the question again?
Does the ECB press conferences move markets more than the Fed?
No. Do they?
That's according to their survey, yeah.
But I don't know, man. I really don't know. I really don't know what to make of the ECB, the European Union, all these dozens and dozens, hundreds of people working there and achieving nothing.
Yeah.
Sorry,
I think they've got half a point. I mean, if you take just the last press conferences, the ECB are more concerned about their message being pushed through and keeping their message in play than the Fed. I think that's probably why they have more effect. I mean, if you look at Powell at the last one, every hawkish comment he gave, a dovish comment, he really walked along the fence, walked down the middle of the road. But Lagarde, when she wants to push her message, she won't let the market deviate from that message. They really want to reinforce it. So I can say, that survey might be right. But anyway, enough of that. You guys got any headlines you want to throw in?
No, it was. It's been pretty quiet overall. I don't see. I mean, the Italy bank tax thingy, has been the one of importance. But you covered that, and the Chinese numbers, which we're seeing negative CPI and actually negative PPI as well. And this is not the first reading either. Year on year. We've had now 1, 2, 3, 4, 5, 6, 7, 8, 9 prints in a row where PPI is negative year on year. So this is in line with broadly what I've been saying for a while, and I think what kind of makes sense as well, given the nature of the inflation that we saw last year. And I think there's some countries. Which country was it? There was one of those that had a negative 40% or something like that PPI year on year, which is. It sounds crazy, but it is a little bit of a return to some kind of normality. But no, I'm still of the opinion that inflation prints are going to continue to disappoint, especially in the US. I know people are not expecting it tomorrow. I am. Anyway, let's see. But you covered pretty much everything, I think.
Yeah. The only other thing that I read overnight is that the National Institute for Economic and Social Research in the UK is not as optimistic on inflation or growth compared to the Bank of England prognosis. But we've known from the past that they are looking at stuff more through the dark glasses than mostly Bank of England. So that's the only other thing that I picked up about this TSMC. I think it's positive, but you have to know it's I think 11 or 13 or so billion euro investment spread over I think it's 7 years, and the boat is going to be invested by Europeans. The TSMC themselves are investing about 30% of it.
Yeah.
So
okay. That's gonna drag things out
a little in perspective. But no, you covered everything, mate.
Yeah, I think maybe from that we need to see if there's any sort of response from China, because China doesn't like anyone getting in with Taiwan.
Good point.
So we wait to see what may come from that. Right, so just looking at markets and proper turnaround Tuesday yesterday. Going to have a quick look at oil because it's just now breaking up through the 83.50 area. This had been boiling for a while, but yesterday it looked like we were looking at another failure because we were coming all the way back down to the 80 level, and we've completely swung around. So this break, if it has legs, could really be a kicker because we've sat in this range for such a long time. You might expect that if you do get a break, it's going to really kick on. I mean, I would not be surprised if we start moving up toward $90 if this break is maintained. Lots of work to be done in the way. We've got to get through this traffic zone that we saw last August through September. Part of the move is on the way down. So I think around this 84, 85 area is going to be a bit of a sticky zone if we maintain this break. But if we are kicking out of this range, then I would expect it to perhaps have some legs on that. And that's partly put a bit of a brake on dollar CAD, which a lot of us in the chat room have been trading. We got a move up yesterday to the 145 area. Excuse my scribblings. I was just doing some examples in the room, just the prior levels to watch on the way down. So we had this move up 135. It held, got through, just tried to nick some stops just above. We traded at sort of 02, 03, I think, as a high, but failed pretty quickly. Had a dip down to the 70s, then a bounce, couldn't take on the 135 again, and then it's been downhill ever since. The 134, low 134s is where we've found the main bulk of support at the moment. But this oil break is probably keeping it in check down here. It's not falling any further, so CAD isn't gaining on this oil move for now. So we've still got a lot of the dollar effect in here rather than the oil correlation. But it remains to be seen whether that continues. If oil moves up, that may put further pressure on this going any higher, and it could mean we get a breakthrough back through 134. So that's a risk if you're trading Luna, if you're long, which I am. So I'm going to be watching this very carefully to see what this wants to do around the 134 area. If we want to get a move back to the highs, then we've got to potentially knock out some of these smaller levels around 134.20, 30, 45.50, and then this line here marks the 200 DMA, which is currently at 134.51. So for me, I think it's a wait and see game for this one. If we get a move up to sort of 134.70s, that area, I would potentially expect a bit of resistance coming in to protect these highs now. So a bit of a step down. If we see that, I would think that maybe we're going to get a move lower. We really need to take out these highs and bust 135 reasonably quickly, or we're going to see more longs thrown in the towel if we can't get up to those highs again. So if we hold this 134, I am expecting to move back up, but I'll be watching closely to see how far that goes. And if we don't get close to these highs, I might think about exiting my longs altogether, maybe thinking about shorts, but we shall see. I've got some good margin, so I don't need to panic just yet. I'll leave you dollar yen, Kate, and have a quick look at yeah, mate.
Yeah, by the way, I mean, and sometimes it gets overlooked, but sorry, at the end of phase we will have the building permits out in Canada, and there's always a lot to do about the housing market in Canada. So it may be a little bit, perhaps only an algo blip or so, but it could be a small mover, just for people to know that if they see a move at 1:30 London time, that may be it.
The reason. Yeah, thank you very much for pointing that out, mate. Aussie dollar has a decent bounce as well. We did tap down at the big figure, the 65 area, so getting into a bit of an area that was former support, so down around sort of 64, 80s, 90s. Didn't quite get down there, held the big figure, give or take, and we've seen a bounce, but the bounce so far is looking not overly strong. We've got back up to a bit of an area, previous support and resistance area around here. We're seeing similar patterns now, you know, developing in a lot of pairs. You know, since it's moved down, we keep making lower lows, lower highs. It keeps drifting lower. So this bounce looks okay on the face of it. Certainly if you bought down here, you've had a nice trade. But unless we start reclaiming some of these higher levels, particularly getting back above 66, the bearish trend remains, means we're probably looking at maybe testing these lows properly in the not too distant future. The same for stocks. S&P, another interest I've got on this one, trading wise. Looked like we were making a decent break yesterday. We managed to get through this 45, 85, 44, 85, 90 area. Looks like we might be sounding pretty, but a bit like coal, a big turnaround, moved all the way back up into the 45s, but we're not taking on this prior high from Monday, around 25. So again, this pattern that we've seen, general downward pattern, lower lows, lower highs, is still in play. Unless we start breaking some of these previous highs, or unless we get a low that's higher than this low, the pattern remains. And so it remains bearish for now. But a lot of work to do. This 44.90 45.04, 05. Seems to be a little bit of a pivot level. What I would like to see for my shorts is a move under there and holding under there, but we can't seem to do that, and that's could mean that we're going to start moving back higher. But again, unless we start taking out some of these recent highs, the bearish pressure remains in place, and potentially we're heading back down towards lows, or could do. If we keep making lower lows, then I would expect us to start finding resistance up here, and then we maybe push down to 45.5 level. Still, what do you make? I know your longer term view. What do you make of this short term action though?
Well, yesterday's action, the S&P, of course, it was turnaround Tuesday, but I remain of the opinion that as long as we don't breach that very important support area, which comes in at around 44, well, I have a line at 44.50, but it's not exactly there, so it's going to be somewhere between 44.40 and 44.60. That's an important level or area. And yesterday, where did we stop? 44.66. So that was close. We're still in an uptrend though, and of course it will depend on tomorrow's CPI in a big way, because if it comes in strong, then I think equity is going to be under pressure and could well breach that level. But I don't think it will. So that's why I still think we're in an uptrend, and technically there is still no reason to be bearish. Sorry, I know I keep repeating myself, but that's the way I think.
That's your view, mate. That's your view.
And that's the thing, when you see something that has a trend, and unless you're looking at 15-minute charts or 1-minute charts, this trend is still there, and it's one of the most difficult things to actually say, nope, I'm not changing my mind, it's still there, we keep going. It's very easy to try and tempting to try and pick a top or a bottom and trying to be the hero. But on this occasion, I really don't think it's worth doing that.
No, and you're right. We spoke about it. It's trends within trends. You look at this, we now have got just under 3/4 of a month of downtrend. That's plain as day. But then you look at it in the context of the bigger picture, and it's just a minor pullback. So that's why it's important to always, if you get stuck into the short term time frames and you're always looking at a 15-minute or 5-minute or whatever, it's always worth zooming out to the higher time frames to see what does this move intraday mean for the bigger picture. And for the bigger picture, it suggests nothing that this trend is going to change just yet. Maybe if we get down to the 38.2 fib, well, maybe there's questions to be asked. But even so, and even this whole move, you take that in a weekly context, and again, it's just minor. Even this move is minor when you're talking about looking at years gone by. So it's all trends within trends within trends. But have a look at the bigger picture, zoom out to the wider time frames, just give you an idea of how things stand over the whole landscape. Kay, do you want to grab it? I know. I assume we're going to talk about the MEX. We've got inflation data coming out just ahead of the Banxico tomorrow. Is it going to be a mover, do you think?
It should. But I just want to show, if you do you allow me to show the chat room?
Yeah.
I'm just going to run it through it quickly. Am I allowed?
Yeah, go ahead.
Yeah, of course. Yeah.
Okay, guys. I'm just want to tell you, this is and I know it's been shown on Face and stuff, but when we arrive in the morning, usually what we do is getting a run through of a gigantic amount of charts, talking about stuff. Myself, other people in the room, Ryan, we update a lot of stuff. So if ever you want to know what's going on in that chat room, you should really join it, because we are talking about a lot of stuff every day, and we don't have time nor the leisure to show it all on the flow show. So you should really join our community if you can. So you're seeing my MEX screen?
Yes, sir.
Okay. So when the biggest news of a day in the markets is Mexican CPI, then there's not a lot happening in the majors. This is really a transition day, I guess, in the majors, waiting for what's going to happen on tomorrow's CPI. In the meantime, okay, we got CPI out today. So there's two levels which have been very, very well defined on the price action of the past sessions. So we had this break above 1703, ran up into very, very good resistance around 1740 on the dollar mix, and then we retested this broken trend line. This is still an intermediate trend line, right? This is not your big downtrend being put in danger or to the test. But anyway, for what's going to happen today, we have to do. This trend line is coming down a bit. There's enough moving averages on the 4 hours as well in that zone, 1696, 1697. It's nice to get a confirmation below a big figure, an extra confirmation to see if we're going to see a break in case CPI remains more sticky than expected. It's expected to gradually come down in Mexico as well. Same thing as everywhere else. The PPI is also coming out, but if you get a steeper decline in CPI, where the Banxico has already been indicating that they won't be in a rush to hike more, but if they see CPI coming down quite rapidly, then I think the market will go speculate that actually Banxico might start to really change tone and look at perhaps future rate cuts. We already had Banco do Brasil cutting rates. I think that was last week, and that was part of this blip actually in dollar mix when the carriage rates were put on a little bit of pressure. But we can confirm, and this has been confirmed again, this 1740, give and take 2-3 big figures. It's an emerging market currency. You can't really pin it down to a strict level, but this is what we are going to watch over either CPI plus Banxico, or perhaps CPI could already be enough to break one of each sides. Now, if you don't like to do the dollar mix, because tomorrow we've got the US CPI, we've got pretty similar on the euro mix, and the level there is going to be around 1870. We're hovering similar to the dollar mix. We're hovering around 7-8 big figures above 1870. That's going to be your first marker, and if it would break back down below 1860, then there would be a very good chance that this is going to retest lows at some stage. If in turn we are starting to get back above 1895, 19, confirm it through 19, 10, 15, then this thing, there is not a lot that is going to hold it back from running back into the 19s. Into the mid-19s. Why not even get closer to 20s? I think today's CPI may be very important for the Mexican peso, you know. Although it has to be said that in the medium term, we have seen studies coming out that people are still investing in Mexico and stuff. But I think for the shorter term, we have to be very careful, especially if we get a lower than expected CPI, because then I can expect the Banxico tomorrow to really start changing tone. And even if it's still an 11% currency, they could start to really hint at cutting. Okay, so keep the mix close today, because it could be actually a driver for other stuff as well. If you start to put pressure on the Mexican peso, that may, per correlation, start to put pressure on carriage rates. So it could have a bit of a spillover effect on stuff like yen or euro or stuff like that. Okay. Quick look at the yen. The yen is a bit of a strange animal, but we have to acknowledge that it's a little. Let me hide this one for now. Then you can see this cloud clearer. We've never stayed very long into this cloud, and we're back above it now. We have to also note So today the cloud is around 142.80. If that holds, we could perhaps push a little bit higher. Therefore, I need to go on to a smaller time frame, because there we are very clearly going to see this this zone here, anywhere between 143.40 and 143.90 is going to be your gateway for 145 again. As long as it stays below here, there's still a chance that dollar-yen will start to move lower again, but that will depend on tomorrow's US CPI. Until then, I still note that since then, the Bank of Japan, we've done a spike higher. We've moved back down, but couldn't stay in the 141s, and we're trading at relatively high levels compared to what we have seen lately. So that tells me that the market is still not on board with a really long yen. And if you look at the 10-year JGB yields, they are telling really the story. I mean, yields elsewhere have come down. They were stuck around 60 BPs, and then today those yields have come off again. So that shows us and tells us that the market is still not really on board with a stronger yen. And the rest really is in ranges. We've already spoke about those kind of ranges, but if you look at the euro dollar, it held this little bit of a crossroad yesterday, and now 110 is a bit of a resistance. I don't see why there would be enough strength today, barring surprise news headline coming out here or there, for this to go and retest different levels than the ones we've been trading of late. There seems to be a reasonable demand there. That is something that yesterday was pretty notable. Once we went into this area, it traded there for a while, and then it started to go up again. And then we've spoken about this dollar China, right? So we had a double break here, 720, 721. We retested somewhere in the zone this morning, but it's holding. So despite the sales by the Chinese submarines or official banks that put it that way, they failed to put it back down 720. I think this is going to be really the market, 720. And then, as Ryan mentioned, that 725, it is a bit of a level as well, before we can talk about 728 again. If that would go, then it's probably back onto this level. But as we've been saying, we do expect that this move is going to be accompanied by probably banks trying to smooth the move, and possibly Bank of PBOC keeping their fixings stronger than where models would suggest they should put it. But the global picture isn't changing. Do I need to show anything else today, Ryan? I mean, or is there anything you? Oh, perhaps just looking at the metals quickly. Gold is trying to hang on, trying to cling on to this level, but we are on it. We're constantly on it, and we're weighing on it. You know, if it breaks up 1921, 22, there could be a quick run down to 19, 18, 90s. Not sure if there's much more to come before the US CPI, but it's just a possibility, just because it looks a bit heavy, and silver is even looking heavier. That one is a bit of a troublemaker right now. I've added just a little bit around here, but I'm way not where I would like to be in full positions, because I do think this market is looking still a bit fragile. And there is this possibility to go down below 22 bucks, I think. There, I'm going to seriously think about adding the rest. But we have to look at data. If economic data remain or are sluggish, this one is really going to be slower. We need inflation coming off a little bit and good data, and this one then could really start to take off. But I mean, this is a real game of patience for the time being. And that's it for me. Back over to you, Ryan.
Thank you very much, mate. Still, you got anything you want to chuck in before we call it a day for today?
Not really. You know, we are still at. We haven't really broken in anything. That's still the case. You know, we're still looking at gold. We are at support, like Kay said, clinging onto it. But really, 1895 is the big level. S&P still not broken to the downside. Yields still kind of in the middle there, you know, between the breakout point and 420, which was the high. So really, we're waiting for tomorrow. I have nothing more to add. I apologize for that, but yeah, I will be boring and say nothing new.
Yeah, well, you know, that's the thing about trading. You know, people see markets different ways. You know, people find trades in between what we find. Some of us find boring ranges and stuff. There's always a trade for someone on this. Can you see my screen okay? I just want to make sure that
yes, we can. Yeah, yep.
Good. That problem I had yesterday. Cool. Well, we'll call that a day today. As I said, Kay mentioned the Canadian data. Keep an eye on that if you're trading Loonie. Otherwise, else we've just got the NBA stuff and that Mexican inflation. And for the oilers, we've got the oil inventories later on the EIA one. So keep an eye on that if you're trading oil and the Loonie as well. Tomorrow is CPI day. Be good. I'm off on holiday for a few days. Still, you're missing the flow show tomorrow as well, aren't you?
Yeah. I have a
so
yeah.
You've just got Kay to keep you entertained, which I'm sure he will do. So
yeah, I'll bring a few cocktails, a few beverages. We'll talk about bar and you know.
Yeah. So make sure viewers that you've got your questions ready for Kay. You know, if you want to know what's happening between the Brazilian real and Polish zloty cross, you know, put it up there for Kay. He'll have a look at that for you, definitely. But yes, keep him plugged with the questions, and I'm sure he'll enjoy that. Anyway, thank you very much again to my colleagues Kay and Stel, and thank you to the viewers, all of you, for coming to the Flow Show. Have a great day, all. See you soon.
Thanks, chaps. Bye-bye.